major regulator has launched an investigation into a business model that the majority of prop firms are currently using. We re-gone. Nah, look at what this means and what you need to do right now. If you do, want to lose everything. Welcome back to the channel, everybody. It's me, and this is a show where we discuss everything going on in the world of trading and investing in the financial markets. You see, most prop firms today are not actually brokers. And what the ASIC is saying is that there's a rise in what they call funded trading. And you haven't received your payout. Well, tough luck, because it looks like it's unlikely that you'll ever get that money back. And of course they go on to explain why. Sounds familiar, right? But then they go on to say that these types of investments may be considered gambling rather than an investment. Well, firstly, you need to start withdrawing your profits more regularly. But if you follow these steps, you're going to be able to keep on trading. And if you got something out of this video, hit the like button. Thanks for watching, and we'll see you next time. Do you want to keep it all in, because if something happens and the company shuts down or gets regulated, then you could lose everything. Secondly, you need to diversify. Don't put all your eggs in one basket. Open accounts with 2 or 3 firms that have different models and are headquartered in different countries, just in case one country cracks down. And thirdly, prioritize companies that are more transparent about their liquidity providers. For example, a company that is partnered with a well-known broker is probably be more safe than one that is uned. Everybody seems to be ignoring the fact that the majority of prop firms today are not actually brokers. Well, if one major country like Australia or the UK, where the FCA is also looking into this, starts to ban or heavily regulate the prop firm business model, then other countries will follow. This could force prop firms to shut down, cancel payouts, or radically change their rules, and this could happen overnight. And when I say radical change in rules, I'm talking about things like lowering the profit target so that people can never actually reach the top level, or making it so that you can only trade certain instruments like stocks instead of forex and indices and metals and so on. Basically, anything that makes the prop firm business model less profitable and less attractive. They do unhold the capital that they say they do, and they do even have to, because the business model that they're reusing is built on something called a CFD. Now, I'm not go into too much detail about what a CFD is, because I've done that in previous videos. But basically, it's a derivative. It's a contract between you and a broker where you essentially bet on the price of an underlying asset. Now, this is already a bit of a gray area, because technically it's not trading. It's gambling, but it's still very popular, and the reason why is because prop firms can leverage up way more than brokers can, and therefore they can offer way bigger payouts, and therefore would be outside of the scope of the Corporations Act and AFS licensees. That's Australian Financial Services licensees. Then they go on to say that firms that are running these programs may even be acting as an unlicensed broker and engaging in the sale of financial products without a license. In addition to that, they may be breaching other laws, including anti-money laundering and counterterrorism financing laws. Now, this is all very serious stuff, and of course, it's coming from a major regulator, which could signal what other major regulators around the world might do. They don't hold the capital that they say they do. And what they do have in common is that the accounts that they offer are demo accounts linked to CFDs. Now, this is already a bit of a gray area, but what happens if it gets shut down completely? Well, we actually have a report of an investor alert from Australia's ASIC, the Australian Securities and Investments Commission. Now, whether this is a real alert or a hypothetical alert based on other alerts doesn't really matter, because the fact is that it exists and it's a warning sign. All right, so let's get straight into it. There's a big elephant in the room that nobody seems to be talking about. So let's break down this report. So first of all, it's from October last year, but it was just brought to my attention. Now, the ASIC goes on to say that if you've invested in one of these programs. So let's talk about what this all means. Do you see? There is a big elephant in the room that nobody seems to be talking about. Okay, so what does this mean for us? So what should you do right now? Look, the party might be ending soon. Those who aren't prepared are going to lose everything overnight. Now, if you want to learn more about how to trade with a prop firm, make sure you check out the links below.